Wall Street closes mixed on Friday. The Dow gains while the Nasdaq and the S&P 500 slipped for the sixth straight session, led by a sell-off in Nvidia. Markets in the Asia Pacific opened largely higher after Friday's steep sell-off. The GIFT Nifty is also suggesting a positive start for the Indian markets. Oil prices remain firm at $87 a barrel in early trade despite a 3% fall last week as geopolitical developments between Israel and Iran weigh on sentiments. Gold prices continue to rise for the fifth straight week with safe haven buying. However, pulls back with international prices trading below $2,400 an ounce. HDFC Bank delivers a positive surprise on the net interest margin front, but profit misses estimates on a 10,900 crore provision for a balance sheet buffer. Wipro's margins beats estimates in a largely inline set of fourth quarter numbers. New CEO Srinivas Palya says that the company will be bold on acquisitions and highlights 5 focus areas to get back on profitable growth. And the big number to watch out today is from Reliance Industries, which is expected to report a stable fourth quarter result. Improvement in core refining margins is likely to be the key driver. Subscriber addition in the Geo vertical is also expected to improve on a sequential basis. Good morning in the Mumbai News Center. I'm Hormuz Fatakia. You're watching Power Breakfast, and it is start of a brand new week, and we'll take a look at how the Asian markets are starting up this morning. It's a bit of a rebound that we are seeing across the Asia Pacific after the steep sell-off we witnessed on Friday after the geopolitical tensions between Israel and Iran rose, and you can see the Seng is up almost 2% as the Taiwanese index is flat. The Japanese markets are also doing well, and so it's a positive start on the Asian screen, and the GIFT Nifty is also indicating that the rebound that we saw on Friday is likely to sustain as well. 130 points higher on the GIFT Nifty is the implied open. So the momentum that the benchmark indices saw after the lows it made on Friday is likely to continue this morning. But from Asia on to the United States now, and Wall Street had a mixed session on Friday. The Dow Jones gained over 200 points, but the S&P 500 slipped around 50 points, while the tech-heavy Nasdaq also closed with losses of over 2%. Both the S&P 500 and the Nasdaq fell for the sixth straight day. Now, for the week, the Dow Jones was absolutely flat. The S&P 500 slipped over 3%, and the Nasdaq lost even worse, which was around a 5.5% fall for the week for the Nasdaq. The Friday's fall was led by a 10% plunge in shares of Nvidia, which saw their worst day since March of 2020. Meanwhile, shares of Netflix were also under pressure after the company shared a weaker than expected full-year revenue growth outlook and also said that it will no longer report quarterly subscriber gains going forward. Tesla, Meta, Microsoft and Alphabet are all set to report earnings this week, while investors will track the Q1 GDP data, which is due on Thursday, and the March PCE data, which is due on Friday. So a bit of an events-heavy week coming up on Wall Street, and we'll keep an eye out on all of these cues. But staying with Wall Street, let's get you some important opinion on the market setup, the Federal Reserve's potential path ahead, and what would that mean for the equity markets. Listen in.
I think we're going to get a good PCE deflator number next week. Yeah, which I think 2.7% will be the lowest in 3 years. And by the way, that's only 3/10 away from the year-end target that the Fed set in March of 2.4% for that deflator. So I think, yeah, we had 3 disappointments on CPI. I think PCE will come in, and I think our CPIs are going to start coming in May and June. So, and when we take a look at the futures, we've squeezed down to basically 1 cut by December. I actually think that we could get more if we get these good deflator numbers and inflation numbers. So I think, you know, I still see gains in the market going forward this summer.
Well, our base case is that the first cut will be in September, and then we see another cut in December. Of course, this all depends on how the data actually comes in. And from the Fed's perspective, at the moment, the biggest problem is the inflation data. So after very good prints in the second half of last year, all 3 months of the CPI data we had so far this year are too high, and you know, those numbers will have to come down for the Fed to cut. But it's not all bad news for the Fed if you're looking to cut. One of the big things that I think doesn't get enough attention is that wage growth has slowed and continues on a downward trend. This makes it a lot easier for the Fed to cut because it has implications on the medium-term outlook for inflation, which is really what the Fed's concern is.
That's all the global market action that we have from Friday and from over the weekend as well. But how will all of these cues impact our own markets? We have our research team joining in for the Power Prep segment to tell you about the trade setup, the stocks that are likely to be in focus as well. First up, we'll start off with Ekta, who is here to get us all the market cues we need to watch out for. Morning, Ekta. We saw a bit of a rebound on Friday, ended the week lower, but the GIFT Nifty suggesting a positive start today as well.
Well, yes, absolutely, Hormuz. Morning, you summed it up. The markets did recover on Friday on a day where there was a lot of geopolitical news between Israel and Iran, but that seemed to have petered off and the markets did recover. So the Nifty closed above 22,000. Overall, it seems as though the market sees a limited risk of a wider war between Israel and Iran, and that's basically what is aiding equities in Asia this morning as well. So, however, the US markets did see a close which was lower. Nasdaq fell for the 6th straight session. Nvidia, like you mentioned, slipped around 10% odd. Dow ended higher. We have oil, which is sub $90 per barrel, so that's a positive. Asia, which is ticking higher as we speak, and the GIFT Nifty indicating a positive start. Besides the global cues, the markets will also be reacting to HDFC Bank, Wipro and Persistent that released numbers, along with the likes of IREDA and a couple of others such as HDFC AMC. Now, results today, we have Big Boy Reliance, we have a couple of small numbers, rallied, Tejas Network, but Reliance will be out post-market, so we'll be reacting to it tomorrow. Now, watch for support. The Nifty intraday low on Friday was around 21,778, so we'll probably watch for support at those levels, but as of now, indicating a positive start for our markets.
Positive start indeed. It's a gap up that we are expecting for our own markets, considering how the GIFT Nifty is doing. Thanks a lot, Ekta, for all these market cues. Now over to Sudarshan, who would be listing out the stocks that we need to watch out for this morning. Morning, Sudarshan. HDFC Bank is topping a list, I guess.
Morning, Homa. So I want to start with HDFC Bank, that will be taken by Abhishek. So I'll start with Wipro, for which Q4 earnings came largely in line with estimates, but guidance is muted. Dollar revenue is flat at $2,657 million, and constant currency revenue is down 0.3% sequentially. And Q1 IT services revenue are seen at minus 1.5% to plus 0.5%. Next is Persistent. Q4 earnings largely in line with estimates. Constant currency revenue growth of 3.4% sequentially versus estimate of 3.2%. EBIT margin was at 14.5% versus estimate of 14.8%. Next is HDFC AMC. Total quarterly average AUM was up 11% and equity AUM was up 16% sequentially. Revenue yield fell 3 bips sequentially to 45.4 bips. Company says one-offs impacted yields and expected to normalize in Q1 FY25. Sterling and Wilson has reported profits after 3 years. EPC business and domestic order books see improved execution. EBITDA was at rupees 29.4 crore versus EBITDA loss in the same quarter last year was at rupees 352 crore. Keep an eye on Ultratech India Cements. Ultratech has bought grinding unit in Purli, Maharashtra from India Cements, and value of the deal is rupees 315 crore at $34 per ton. Lupin and Zydus Life companies have announced launch of 25 mega strength of generic mirabegron in the US and drug used for an overactive bladder. 25 mg strength has estimated sales of $1 billion.
Sudarshan, thanks a lot for joining in and sharing all the stocks that we need to keep an eye out for in today's session. And lastly, Nigel joins in with cues from the F&O space. Morning, Nigel. We were back almost around the 22,000 mark again. What is the F&O cues indicating?
Well, what a big recovery we saw, right, Hormuz, on Friday's trading session. Big recovery on the Nifty as well as the Nifty Bank. That's telling you that the bulls, they want to buy at lower levels and they want to fight back. What did the FIs do? Well, after quite a few days, after 4 sessions, they went ahead and they bought close to around 650 crores in index futures. We were making this point the other day that they're going very aggressively on the short side. And when that happens, something's got to give. And this time around, they've added more than 20,000 contracts, both on the long as well as on the short side. So on the long side, in fact, they added more contracts in comparison to the short side, though they continue to remain net short with 65% of their positions on the short side. And in absolute terms, that number is 1.03 lakh contracts. So the FIs are net short to that degree itself. 2 strikes I'm looking at. And remember, we're getting into the expiry week. So options data becomes very, very important. And the two strikes that have a fair bit of open interest with close to around 70 to around 80 lakh shares on the downside, the 22,000 put. That's an important level out there, close to around 78 lakh shares in terms of total open interest. And the 22,500 call as well has a fair bit of open interest, which brings us to the levels. Now, resistance. Resistance zone is around 22,300 to 22,500. And I back up that point by saying the 20 DMA, that's closer to around 22,300. So that's why that's the first level I'm looking at. And on the upside, the options data is suggesting 22,530 because the 22,500 call was fairly active. The premium of there is roughly around 30 rupees. On the downside now, we are seeing fair bit of put writing at around the 22,000 put, as I mentioned earlier. The 100 DMA comes in around the 21,729 approximately. And Friday's low as well is in that vicinity. So that's the crucial zone that you want to defend on the downside. And the bulls will be looking at those levels. The Nifty Bank as well, crucial levels come up for you on the screen. We ended closer around the 20 DMA. If we're looking at support zones, 50 and around 100 DMA as well out there. So we need an additional trigger. I think maybe Reliance Industries could provide that much needed booster shot to move further higher from here on. Back to you.
Move further higher from here on, and then the GIFT Nifty is continuing to grow from strength to strength. Now 150 points, a gap up is in what the GIFT Nifty is indicating. Thanks a lot, Nigel, for joining in. Time for a short break here on Power Breakfast. When we return, HDFC Bank and Wipro will be in focus, having reported their fourth quarter earnings, while Reliance Industries will be on the radar ahead of its earnings later today. We get you all of that covered on the earnings front. On the other side, stay tuned. We'll be right back. But let's focus on another set of earnings that came after market hours on Friday, and that is Wipro, which reported a largely in-line set of fourth quarter numbers. The US dollar revenue came in flat at $2657 million, while it was the fifth consecutive quarter of revenue declines that the company has seen. However, that turned into a disappointing growth guidance for the first quarter, that is a negative 1.5% to a positive 0.5%. So we'll keep an eye out on Wipro as well. And most brokerages also remain bearish. In fact, my colleague Rima spoke to the management of Wipro regarding the company's discretionary spending, margins and the attrition rate. Listen into what they had to say.
Priority for us at this point in time is how do we execute to the 5 priorities that we called out, right? Whether it's to do with creating a large deal momentum, or whether it's to create a growth in some of our large accounts and also accounts that we think can be large accounts. We make sure we have the right solutions for the clients, which are infused with AI but consulting led. And then the last but not the least is building the skills which actually are very industry specific and also can be able, can offer the solutions that we have for the clients. So to me, instead of trying to predict what's going to happen, I think what's important for me and the team and for Wipro is to execute to what's coming in our way.
We are going to be range bound in terms of the margins that we have delivered over the last few quarters. If you look at our journey over the last 8 quarters, we've improved our margins. We've been consistently improving it. 60 basis points away from 17%. It is a milestone. It is an aspiration that we all have. But one step at a time. Revenue is very, very critical, and the growth is very, very critical. We will remain very focused in investing for growth and drive operational excellence.
From an attrition perspective, I'm seeing that what we were seeing a declining trend over the last few quarters, it's plateauing now. Now, this could be a sign from what's green shoots which we are seeing in some of the sectors and consulting, that if demand is picking up or it might pick up in the near term. First, we will honor every offer we have made. As we onboard freshers, we actually reach out to a group of people with the right skill and ask them who are interested, and then we onboard.
And on to the Nifty heavyweight now, and that is Reliance Industries, which is set to report its fourth quarter numbers today. Sonia is here to tell us what we can expect. Sonia, over to you.
Well, Reliance Industries is all set to report their numbers, and we are expecting a stable set this time around. Let's take a look at the stock first. It's been a very good performance for Reliance Industries. The stock is up almost 30% in the last 6 months. In fact, in the month of March, the stock hit a fresh 52-week high as well. Now, let's go across and see what you can expect from the numbers this time. A decent set of numbers. So 2.35 lakh crores is what we're expecting on the top line, slightly higher than what they did last quarter. On the margin front as well, we are looking at the EBITDA to fall just a tad bit, about 2% or so, while the margins will be stable at that 17% mark. On the profitability, a double-digit up move in profitability is what the street is expecting this time from Reliance Industries. The core business is something that has done well because of higher oil prices, a better refining margin, and hence that will be the key driver for Reliance Industries this time, an improvement in the core refining margins. If you move on and talk about, the quarter-on-quarter performance, remember the refining earnings were impacted by shutdowns last quarter. So quarter-on-quarter, this will look like a good performance. In fact, across the board, whether it's retail, whether it's telecom, there will be a sequential improvement in most of the businesses. In fact, in Jio as well, the subscriber momentum will continue quarter-on-quarter. We are expecting 10.8 million net additions this time around to subscribers, and a continued upward bias to oil is something that should drive performance. That's the word coming in from JP Morgan. In fact, JP Morgan continues to maintain an overweight on the stock. Standard disclaimer, Reliance Industries owns the channel that you're watching.
We'll keep an eye out for Reliance Industries as it report earnings later today. But moving on to another important news story, a CNBC TV18 news break that was confirmed as Tesla CEO Elon Musk, who was scheduled to visit India, has announced that he has postponed his trip to a later date in the year. The CEO took to X and announced that he had to reschedule his visit owing to heavy obligations at Tesla. Now remember, Tesla's first quarter numbers are due on the 23rd of April, and Elon Musk will have to attend the critical earnings call to address the recent issues at the company, including the massive layoffs, the negative growth in China, and the launch of its Model 2. So we'll keep an eye out on the updates that are coming in from this as well. But it's time for a short break here on Power Breakfast. Up next, we get your cues from the commodities market. Stay tuned. We'll be right back. Welcome back to Power Breakfast here on CNBC TV18, and as promised, Manisha Gupta joins in with all the updates from the commodity space. Morning, Manisha. What do you have for us this morning?
Well, I'm looking at pressure in various commodities, and that is because the Iran-Israel tensions almost de-escalate, with both of the parties or countries playing it slightly down, with strong statements coming in from U.S. as well. So you have the crude oil prices, which have posted 3 to 3.5% of a decline in the previous week and have started this week as well on a slightly softer note. Well, also the observation that the U.S. Fed may not cut rates until September is weighing onto the markets. And when you look at the U.S. oil production, that is at a record highs, and the inventory is also surged by nearly 2.7 million barrels in the previous week. So we are looking at enough inventory and supplies around the market, and the demand situation not still strong as of now. Profit taking also is seen in precious metal prices. So gold is almost a percentage point down. Prices have hit record highs for most part of April, but we are trading below $2,400 an ounce right now. Same is the case with silver, more than a percentage point of decline here as well. Well, while there has been support from geopolitical tensions, but remember, the prices had run up too much too soon, and there is finally some correction, and a healthy one happening right now.
Healthy correction indeed. Thanks a lot, Manisha, for joining in and sharing us all the updates on the commodity space. But the Asian markets continue to do well despite that mixed handover from Wall Street. The Taiwanese index, which was flat at the start of the show, is now up 0.5%, and the Hang Seng has also built on its gains. It was up nearly 2%. Now it's up 2.5% as we speak. The Japanese indices are also doing very well this morning. With the Japanese, the Nikkei is up 0.5%. The Topix is also seeing gains of 1%, and the Australian indices also are up 1%. So gains across the board when it comes to the Asia Pacific markets. And the GIFT Nifty at one point of time was up 150 points, still continues to show a 140 point uptick at the start of trade for our own markets. But with that, it's a wrap on this edition of Power Breakfast. Bazaar Morning Call takes the action forward. From myself and the team that put this show together, thank you so much for watching.